Hello dear student friends, now we are going to take some MCQs on advanced capital budgeting. I hope all of you are ready. Let us see how much you have studied on advanced capital budgeting. Have you understood or not? As a teacher, we are also interested in knowing whether our students are learning or not. One of the ways just to test quickly whether the students have understood the concept or not is through MCQs. Here is my first MCQ for you. You have to answer A, B, C or D. Okay. So while typing your answer, you have to write 1A, 2A, 2B, whatever, so that I can understand which question you are replying. Otherwise, sometimes the answer comes a little late and by that time I have moved to the next question. So are you ready? Answer first question. Risk arises from various sources. Market risk, competition risk, international risk, all of the above. Which option is right? Very good. You have given correct answer D. Option D is right. Try the second question. Expected cash flows are calculated as, which we have done in this chapter in the beginning. Expected cash flows are calculated as sum of the likely cash flow of the project. Very good, Sajid. Sum of the likely cash flow of the project multiplied by probability of cash flow. Third, sum of the likely cash flow of the project divided by the probability of cash flow. And D, none of the above. Which option is right? 2B. The student is saying 2B. Very good. 2B is the right answer. Third, variance measures A, how far each number in the set is, just write this also if not printed in the book, away from the mean. The second line, away from the mean, is not typed. Please write it in your book if not typed. B, the mean of a given data set. What variance measures? How far each number in the set is away from the mean? The mean of the given data set, return on investment, level of risk borne for every % of expected return. You have to choose the best option. If you think more than one options are possible, choose the best option. So the correct answer is A, 3A, tick mark 3A. Question number 4, certainty equivalent approach is, option A, guaranteed return from an investment after adjusting for certainty equivalent coefficient, return that is expected over the lifetime of a project, equivalent to net present value, an important component in decision tree analysis. What is the right answer? 4A. Very good. 4A is the right answer. 4A, guaranteed return from an investment after adjusting for certainty equivalent coefficient. So the formula for this is certain cash flow equal to uncertain cash flow into certainty equivalent coefficient. Very good answer. Okay, question number 5 will require calculator. The firm is expecting an NPV of 10,000 if the economy is exceptionally strong with 0.3 probability, NPV of 4,000 if the economy is normal with 0.4 probability, and NPV of 2000 if it is weak 0.3 probability. What is the expected NPV? Quickly reply. The student is saying 5A. 5A is the right answer. If you multiply all these numbers and take the total, it will come to 5200. So 5200 is the right answer. Now the question number 6 is, what is risk premium? What is risk premium? Risk premium is the extra rate of return expected by the investor as a reward for bearing extra risk equivalent to the rate of government securities return provided to equity shareholder or risk-free return or risk-free rate of return. 6A. The student is saying 6A. 6A is the right answer. It is the extra rate of return expected by the investor for taking extra risk. You are right. 7th number, calculation of coefficient of variance depends on. Calculation of coefficient of variance depends on standard deviation, expected return, expected cash flow, all of the above. Coefficient of variation, standard deviation upon return, but this return can be expected cash flow also. So the answer will be all of the above. All of the above. Very good. Next, scenario analysis is considered under scenarios such as worst case scenario, best case scenario, all of the above. Answer is very obvious here. In scenario analysis we consider worst, best case scenario. All of the above is the correct answer. Very good. Question number 9. Sensitivity analysis is useful in decision making because it shows the probability associated with each outcome. Write down. It tells the user how much critical each input is. It allows to calculate the probable result under different scenarios. The results of sensitivity analysis are reliable. What is your answer? After doing sensitivity analysis, you will get to know that sensitivity of the project is 20%, cash flow is 25%, discount rate may be 2%, material cost may be 5%. So after knowing all this, you will get to know the criticality of each input parameter. For example, if the sensitivity analysis gives you 2% only, it means discount rate is very critical. Change in discount rate even by 2% can affect the project. So you will tick mark B. B is the right answer. This is the scenario analysis. This option is for scenario analysis. A and D are totally wrong. Question number 10. When the risk is high, the cash flow under certainty equivalent coefficient will be CEC and cash flow. CEC and cash flow. Tell me, are directly related or inversely related? They are inversely related. Higher CEC means risk is less. CEC and risk is inversely related. But if CEC is low, risk is high. This is inverse relationship. So the answer will be B. If the risk is high, the CEC of the cash flow would be lower. So tick mark B. 10B was the right answer. 10B was the right answer. Okay. So with this wonderful chapter is over.